Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 2nd of May. Starting off with the FTSE 100, where you could argue that it actually hit the top of that rising December trend channel, 82.30, looking for an end-of-day close above that to give us a move up to 8,500, which is not only the upper parallel of that December resistance, well, December rising trend channel, it's also the top of that rising 2007 trend channel, so quite a lot of excitement on that basis if we can get up to 8,500 maybe by the end of this month or possibly going into June. On the downside, the favoured support area would be the mid-April resistance 80.44, and then the worst case would be that we have to drag ourselves down to 78.80 in the floor of that rising December trend channel. But at the moment, FTSE managing to stay above 8,100, which is actually quite an achievement. Moving on to the DAX, and here we had its peak a month or so ago, and we're trying to get this market to find support at and above the floor of that rising October trend channel, 17,800, the nominal level there. That's also near to the 50-day line as well. RSI double topped in the low 50s, which is not normally a good look. That suggests that there is a risk of a test of post-March support, 17,600, even if we then head up to retest the highs of the year through 18,500. Moving on to the Dow, and here the picture hasn't been that pretty, but so far we managed to avoid the nightmare scenario of having to retest 2024 support, 37,100. So far the April support there, 35,600 or so, has saved the day, and there's also a chance we could crawl back into the rising trend channel from the end of September, beginning of October, so depending exactly where that line is, we are still in the frame in terms of the uptrend in place since the autumn. Above the 37,800 level, looking at the 50-day line, 38,700 over the next week or two. The negative here, obviously the triple failure for this market at RSI 50 that we've had over the last month. Normally that would cause a market to roll over, and hence the potential for testing 2024 support. But at the moment, looks like we've been let off the hook. In terms of being let off the hook, that's something that you can't say about Bitcoin. Here we had the fear, even before we broke down, that 57 to 5,800 would be the support area. I think the lows so far around 56,500. Worst case at the moment is that we have to test old February resistance at 53,000, or even worse than that, actually, the 200-day moving average, 49,400. We haven't been below the 200-day line since back in October, but not a good look unless we get back above the 60,000 level. That would then suggest we could have another go at taking out the 50-day line at 67,000. RSI near the oversold area now. It's at 32. Obviously, oversold is 30. So the last time we were in the oversold bands, we were down at 26,000. And that obviously, if you bought there, you'd be very happy and potentially very rich as well. Moving on to gold, which had its own rug pull earlier in the week, but looks like so far 22.80, 22.90. There was a low there in that zone, and the first part of April has held. And as long as we're above 2300 or 2305 to be precise, that late April support, there's a chance of another gyration towards 2360, but not expecting better than that at the moment. Probably needs a little bit more consolidation for this market. RSI just below neutral 50. Be nice to see a close for above 2320 and RSI 50 later today. Could argue that the rising trend channel is slightly wider than it's been drawn previously. It was obviously very tight before, so hopefully 2280, 90 it will save the day for gold. Moving on to Asiamet and the stocks. Asiamet has done us proud over the recent past. We had the break of the 50-day line there around 0.64, neckline resistance 0.65 from back in March, and basically the break of 0.65 was the starting gun on the rally. We had a target there at 0.94, which seemed rather ambitious, but that's been done. Second target up to 1.2, which hopefully could be done in a few days. If you're a fan of the shares and looking for greater glory, which I think many will be after, if you look at especially if you look at the left-hand side of this screen, then the next level up, maybe by the end of next month, could be up to 1.75 pence, which is an old February-March resistance line projection. Upside valid here, at least while we're above the old October resistance there at 1.02. It would be very nice if we can stay above that. Otherwise, stop loss is probably down to 0.95, the old target that we had. Moving on to Contango, where we're still waiting for, I suppose, the big offtake agreement. But in the meantime, the market seemed to like the announcement today. A gap to the upside today so far. Really need to break that 1 pence level on an end-of-day close basis. If we can do that, then the next level up would be up to 1.25 pence, the initial April support. But obviously, this is a falling knife and has all the disclaimers associated with trying to catch a falling knife. Best case here would be up to 1.4 pence and the top of that falling wedge that we've had on the daily chart since back in June. Next up is First Tin, which I have been looking at. I don't think anybody else in the world looks at this stock, but we've had a reasonable ride here. Initial target here was up to the 5.5 pence area. Then it was up to 6.5, which was the old support there from spring last year. And above 6.5 pence, we can look forward to a red resistance line projection target from June last year as high as 9 pence. And expecting that perhaps by the end of next month. Obviously, we're really lucky it would be by the end of this month. The reason for expecting it by the end of this month would be the unpulled gap to the upside that we had back at the end of last month, and also the gap closed buy signal that we had earlier, a week or two earlier than that. So looking decent on First Tin, especially given the way that the RSI has bounced off neutral 50 on several occasions in the recent past. In terms of the stop loss, probably the 50-day line at 5.5 pence, the safest area. Ideally, we stay above the old March peak at 6 pence ahead of 9 pence there. Moving on to Funding Circle, where it's always nice to see a stock hit a target line. Initially, we were looking for 51, 52 pence, and then the higher target, 72 pence, which we've achieved with gaps to the upside, unfilled gaps to the upside. Obviously, we started off with a bear trap reversal back in March. So this situation cooking very well. If you are looking for a further upside, that would be the upper parallel of the June resistance line projection, heading as high as 89 pence by the end of this month. In terms of the proviso, would be we want to see this stock stay above 65 pence. That was resistance a couple of weeks ago, and support for today's session with the key reversal to the upside that we've seen so far. So looking very healthy indeed. On to Galileo, which has just been able to announce a ka-ching moment with the cash coming in, and I think it's over £2 million. And here you can see that finally we've got a chance of breaking that resistance line there from December 2022. That's been a real bugbear for the bulls, if that makes any sense. Rising 50 and 200-day lines as well, and I think, as I suggested before, with those two lines rising, there's every chance as we go into a golden cross that we will have the breakout that we've been waiting for. The best case scenario here by the end of the month would be up to 1.8 pence, which is basically the top of that triangle from the turn of the year. And we can get that by the end of the month. That'd be fantastic if we get that breakout. Otherwise, looking for that by the end of June. Upside here valid really while we're above the 1.05 pence, maybe call it a penny if you're being fussy. Ideally, we stay above 1.1 pence ahead of the move higher. Moving on to a stock which is quite fascinating at the moment, a company where Nicholas Nelson has stepped up to the plate to apparently sort everything out. And here you can see that Graft Polymer already had a trendline break from last summer. That happened in the middle of last month around the 0.12 pence level. Shares didn't really move until today. The levels to look at now are the bottom of that March gap there at 0.27 and the 50-day line at 0.33. But the key here, I suppose, is that we just stay on the right side of the 0.17 area, because that was the peak a few weeks ago. Moving along to one of the new entrants for the stock market, Helix Exploration, where it looks as though things are starting to move. We've had 3 nice candles in a row now, which is always pleasant. And the view at the moment is that we've found support above the 10 pence IPO level, which is encouraging. There was neckline resistance at 11.15 pence. Above that, we're looking for 13 or 14 pence at the top of that rising trend channel from last month by the end of this month. A modest target there, but it's normally pays to be modest in these matters. Upside value while we hold above 10.5 pence mid. Moving on to Hummingbird, where as the company's been quiet, we've seen decent recovery, and that's been even in the face of gold's slight setback. The view at the moment is that above the now rising 50-day line at 8.1 pence, we could head up to 10 3/4 over the course of the rest of May. Best case would be that we fill that gap up there at 12.6 pence by the end of this month. Moving on to a stock which has delivered a few fireworks today, Kinovo, and here you can see that we've had basically a bear trap island reversal, so gapping down in February, March, and then gapping up today. The view at the moment is that while we're above the resistance on the way down, around 47 pence on an end-of-day close basis, we've got a chance of filling that gap up to 61 pence sometime during the course of May. But I think whatever happens, you want to see this stock remain above that 50-day line at 44 pence. Moving on to Reabold, which has had a decent bit of news regarding Italy, and here you can see that we bounced off the 50-day line, which is what we wanted to do. We also bounced off the resistance line there from November at 007, and above 007, looking for the top of that broadening triangle from January at 0.11, and then best case maybe by the end of next month up to 0.15, but obviously at the moment 0.15 seems a long way away, but the key here is holding that 50-day line. On to a stock which has been in the news with regard to Nightcap, I believe. Here you can see that Revolution Bars hitting that resistance line there from back in January. That's around the basically around current levels, 1.65. Want to see an end-of-day close above that to give us a chance of heading up to 1.9 pence and the floor of that gap down that we had back in March. Not much, but that would be at least the start of a potential recovery. Don't want to see the shares on the wrong side of 1.5 pence anytime soon. Onto a stock which I was very excited about a few weeks, well, a couple of weeks ago, I think it was now. We had Renalytics crawling along a rising 50-day line, but in the end that failed. Current situation is that we've got a bear trap gap reversal, so bear trap from below the March support there around 23 pence. Above that, looking for the top of that rising trend channel base from back in December at 40 pence. Maybe we see that by the end of next month, but the key here is staying above the floor of the channel around 21 pence. Nice to see the next stock on the move, Reach, and here hit or re-hit the top of that broadening triangle there from November around the 81 pence level. If you're looking for more, then an end-of-day close above 81 pence could take us up to the upper parallel of that triangle there, as high as 95 pence by the end of this month. We're encouraged by the rising 50-day line and the unfilled gap to the upside so far today. We'd be even more encouraged when, or if, the 200-day line, currently at 72 pence, started to rise, as that would suggest that we will have a golden cross sometime during the course of May. On to Wildcat, which has had the winds taken out of its sails over the recent past, but we've got a resistance line there from back at the end of December. That's around 0.17, and want to see an end-of-day close above that to give the shares the chance of filling the gap up to 0.21 and re-meeting the 50-day line. As you can see, basically over the recent past, it's been the 200-day moving average which has blocked the share price. Ideally, no fresh lows, obviously. On to Wishbone, which has come back to life as well. Here we can see that there's a resistance line there from back in July. That's around the 1.25 pence level. Above that, looking for the 200-day moving average, 1.67 over the next month or so. But the key here is staying above that 50-day line at 1.2 pence. Finishing off with Zoo, and here you can see that we've broken the April resistance there at 40 pence. Above that, looking for the shares to visit the top of that falling trend channel from October at 60 pence by the end of this month. We are encouraged by the sideways shuffle above a rising 50-day line that we've had since the end of March, and the fact that it was a successful bear trap gap reversal signal that we had at the end of March as well, accompanied by bullish divergence. So everything going on there in a positive way. That's it for me today. More updates tomorrow.